All right, folks, welcome back. Brand new week, Forex fun. All right, so we have Forex Factory's economic calendar of today. As you can see, it's a barren wasteland. Nothing's really on the news front this morning. So all we're going to do is go over our key levels and what we'll be expecting for this week. We have a very busy economic calendar on Wednesday. We have FOMC business. So let's scroll over that real quick. Tuesday's economic calendar, 4:30 a.m., CPI, PPI, and RPI. One high impact, two medium impact GBP. And again, like I said, 3 a.m. New York time, I'll have the commentary and what I think may unfold for pound dollar tomorrow. 5 a.m. we have a medium impact Euro news. Not too concerned about that one. 8:30 a.m. will be live for Tuesday's trading. And on Wednesday, that's when this is like, forget about it. Don't even try to trade this day. So whatever is going to happen, probably going to happen tomorrow, and then we'll see what the effects are based on all of the high impact news. It's well, like I said, it's 2 o'clock in the afternoon tomorrow on Wednesday, so you know what's going to happen. The market's going to be most likely in a consolidation. It may go into a London swing, then consolidate going into the 2 o'clock, and then we'll have the heart attack move that takes place around FOMC business. And then Thursday should be a little bit better trading day. For the New York session, we have unemployment claims, and then we have, get this little box out of my way, two medium impact at 9:15, which is about 15 minutes before equities open. And on Friday, we have a New York session CAD event that may be unfolding, so we'll be watching that. So let's go over to the charts, take a look at what's going on, see if we can outline some key levels for this week's trading. Okay, we have the dollar index. We've yet to still come down and touch that daily wick over on the daily over November 8th around the Donald Trump business. We've had a nice little pop away from the 96.50 level. It came up into the bearish order block in here. I would have rather seen it come up and hit the rejection block, but it's not done so. So we have a little bit of a fair value gap in here that's almost closed in from this candle's high at 96.96. So far today's low comes in at 97.02. So we have potential to come down a little bit more. We also have a fair value gap over here on the hourly as well. That comes at a high of this candle, 96.99. So that may come in here and clean that up a little bit. Apart from that, we don't have any efficient moves in here at all. Everything's really well balanced. So that takes us down to the liquidity pool right in here if we go any lower than the gap. Without any news, it's probably going to be slow and non-eventful. So bear that in mind for today. All right, so Euro pound ended up going above our high over here. Cleared out the buy stops here, cleared out the buy stops as well. It doesn't look like it's done. It looks like it may want to come up here a little bit higher. We have a little bit of a fair value gap right in here. Let's outline that. This bulge, I gotta go in a habit of taking this off before I sign on live with you guys. I ain't gotta be monkeying around with this business. All right, so we have a fair value gap up to 88.80. We'll call it 80.85. So about 35 more pips for Euro pound. That bodes well for a weak cable or strong euro. So that'll take us over to euro dollar. Now, euro's held up. They kept the economic basically stimulus is the way it is. They didn't make any changes last week. So I like these equal highs still. That still may be a factor for a blowout. And if we've gone through that, that'll be like a 1, 2, 3, and then maybe come down, close this fair value gap in. So with the euro pound being bullish up to that 80-85 level, we can potentially see if cable stops declining, let's say it like that. If cable stops dropping, the outcome would be we expect euro dollar rally up, clear out these buy stops, and there it is. Now, we do have a small little up close candle in here that I'm getting questioned about in email. This is also inside of this candle here, the larger up close candle. This is the dominant bearish order block. So while you can worry about this one if you want. Just go to the mean threshold of this one, and that should be it. If it goes above the mean threshold of this last up close candle, or the largest one, because that's the biggest volume, the range on this is 112.88, and the range on this candle here is 112.87. So this up close candle is inside the range of the more apparent bearish order block. So this one's going to be subordinate. So it's the mean threshold. This last up close candle, that's the line in the sand, if you will. If it crosses over that, it's going to clear the buy stops. As long as it stays below that, we're probably going to look for a move down to close in this gap here. And admittedly, I don't know yet. It's too early in the week, and there's nothing really driving price around today. So I'm looking primarily for a failure at the mean threshold of this last up close candle, and I'll just eyeball it just for the sake of having it on a chart now. I'll actually get the real number during the recap today. So this is the ballpark number here. So we'll say 112.45, 112.50. Basically, if we get above 112.50, buy stops are in jeopardy. They'll run those before they take it lower, or maybe even go higher. Who knows? But I think the trigger is we have to stay below 112.50. So if we break down and roll over, say we make the high of the week today, and we start to trade lower, all eyes go to this right here, not for the weekly objective, but for a swing trade, short-term idea. That may be the outcome here, especially if we fail to go any lower on that dollar index. It doesn't have to go down to that long wick. It could be actually showing relative strength, saying, no, I don't want to go any lower, while the other foreign currencies were able to make respective higher highs. So the intraday price action here, rather muddy. It's reaching. I think it's probably going to make an attempt to come down and clear in this buy stop area in here, little clean area right in here, right before the close of last week. We gapped up, closed the gap, started to trade a little bit higher. Didn't have any real momentum except for the move off of this order block here, so nothing real significant on the upside. You would have thought that it probably would have expanded a little bit more, especially if it wants to gun for these equal highs. No news, so you're getting a lethargic price action. Now let's go over to the cable. All right, so we had 129.80 up in here as a target for last week. It got up to it, went one more pip above it. Let me see what the high is. I think it's one pip. Yeah, 129.81, and then it fell out of bed. May Trump apparently didn't get elected or whatever, and that caused some shockwaves through the UK, and there it was reverberating in the pound. Price tumbled all the way down about 300 pips or so. Came back up into an area that makes no sense here on the hour. Let's take a look at a 15-minute time frame, see if there was anything that we can look at. And just a bearish order block that, in my opinion, went too far ahead. Left equal highs in here, so that may be significant. Watch the rejection block down here. Let's clean this level up a little bit better and put it on, not that. Let's use a horizontal line. So we'll look at the lowest close here, and we'll watch that. If it goes down below 126.56 and rejects, weekly objective goes to these buy stops, and maybe even an attempt to get above these highs and clear up some of the range. I don't think it's going to try to completely fill that in, but the largest trail and buy stops on shorts are going to be right above this high, not these down in here. Even though these are equal, it's a buy stop liquidity pool at 112.75. I'm sorry, 127.75, and then at 128.20. So there's your buy side liquidity reference points. And again, I'll give you all that stuff in the recap for today, but let's go back out to a daily. We have a little bit of a fair value gap remaining down here. I gave you a couple different lines to look for if we broke down lower. It met two of them. I did not have this one on the chart. I just added this one this morning as I was quickly breezing through the charts. This remaining inefficiency is still remaining, left open. This wick almost came down to this high. I don't think that's going to support price. If it's going to come down, it's going to come down and close in this area here. And we'll add that to our chart now. So if we get a little bit of a rally, we have a small little fair value gap right here on an hourly chart. So if we get a rally up into that area, that may be a catalyst for a short to take us down into the level I'm going to outline again on the daily. Give me 1 minute. So we have fair value gap right in here, and couple that with premium to discount. We have a range just to say this is the low here. If we trade back up, it takes us into equilibrium. If we go down below the lowest close here, right there, again, that takes us still on the equilibrium price point. If we go down, say we go down and expand and we blow out the low from last week, or what is that? Is it? I've been away from the markets for a couple of days. Give me a second here. June 9th's low. So if we go through that, say we just wipe out that low by a few pips right here, that would take us up into 62% retracement level. So that might be the catalyst that they end up taking us below these lows and then come back one more time and then maybe make a more meaningful decline. Folks that are going to be looking to take profits below here, they're already short, that didn't get an opportunity to get out at that price point, they're going to want to do that once we get down there. And if it rallies again, my interest will be at this price level here, towards the lower end. And I'll be aiming for 25, 95, 26 big figure. So that would be about, get this out of my way, be about 80 pips or so, give or take, because I'm going to be getting out early and getting in early if I get it at all. So that's about a weekly objective I'm looking for. So that's the scenario I'm looking for cable. Apart from that, I don't see anything below it except for this one in here. So we have a little bit of a fair value gap, but that may be a little bit too ambitious for right now. But that would be a swing objective. So if we get back up into this area here, those individuals like to do longer term plays. We could look for a short here for one shot, one kill, taking us down to this level. And if you can do a position size large enough that promotes an opportunity to take profits here and leave a little portion on for down in here, that would be a good scenario to outline for a case study for yourself. So we'll outline that here. We have a fair value gap denoted by these two reference points here, only buy side delivery here. If we get down below this, obviously it's way down here. We have a couple in here. One, sell side liquidity pool, fair value gap here, and fair value gap down here. So that may be a month and a half, 2 months out type deal. But this is your swing trade objective. Your one shot, one kill is here, and the setup is in here. So we'll wait for that to come back. If it comes back at all, it may not do it. It may have to come up with a different scenario to do this idea, to get down here and close this void. And let me think. I don't have them up, but this is because we have nothing really going on today. Let's throw up dollar CAD. Okay, I had a buy last week before we broke away from one another for a few days and panned out pretty good. Then it's obviously given up back all of the gains. And I think if we go out to a daily chart, this will be a little bit more clear what it wants to do. I think that we have this area right in here, plus the order block. So I like the idea of dollar CAD falling. Alicia Keys just came to mind. The down close candle, bullish order block, and fair value gap right in here. So we can anticipate price trading down to that level here. Now, if it gets to 133.40, if it gets to that level, we could potentially see it pop, trade up, and blow out the buy stops in here, and then clean up the fair value gap in here. So let's outline that. I'm not looking for a total breakdown on this, but I am looking for, let's use this one, let's be conservative. So 35, 65, 35, 70 as the upside. I see that after this level. So in other words, this is what we're looking for. So this is something you guys can study this week. It may not pan out the entire week, but this is what I'm anticipating. I have my other laptop on, and I was looking at this. This is what I'm thinking. Fair value gap, bullish order block, down, then up to clear the buy, stops out, close the fair value gap here. Then maybe, I don't know for certain, I don't know, I'm not trying to forecast too far ahead, but if it did something like this, it would swing high, say it trades down to that level and does what we're expecting, or I'm outlining and trying to sell the idea to, goes right up to 70.50 or the sweet spot, the optimal trade entry. Then from here, sell off, run for the fair value gap right down in here, right below this area here. So that'd be a nice area to sell short as a swing trade, pick up the offset accumulation for a cover for our sell stops below here. So selling here, buying below the short-term low where stops are going to be, sell stops so we can cover that and close in the fair value gap in here. And maybe if it gets a little ahead of itself down in here, not so much here, it's too close to the order block. I don't like that so much. I like this one here. It's a little exposed, two equal highs, so we have a little bit of a range in here that might need to be cleaned up. So that's a scenario I like for dollar CAD, so watch that one, and we'll add, just for spits and giggles, the Aussie dollar. Let's go to it daily real quick. This one here looks like it's found its wings again, so I like this area up in here, maybe drawing up to rebalance this. Plus we have the buy stops resting above this old high. And let's do some swing projections on the fib, see if we get any confluence on that. $162 extension takes us up there as well. So that may be an area. And we also have the fair value gap up here that was left open. So if we continue to see bullish dollar, Aussie dollar rather, this could be the levels at which it may be drawing. This is a little bit more of a swing trade perspective. These aren't short-term day trade ideas. I think these are going to be longer-term draws on price. The market structure certainly looks like it wants to try to make an attempt to do that. And then if we get through here, then we're going to go through what I was trying to do earlier in the year, make a run for those 78s, maybe even 79s as a longer-term objective. So we could have been, this is the big wave up here, and then it comes back down as a retracement, and then it makes another impulse, price swing up. And if we get anything in terms of a measured move from this low to this high projected, let's do that real quick so you can see what could potentially be going on, but too early to tell. So we have this range and projected from this low right there. So all I'm doing is focusing on this low to this high and showing graphically the range and then projecting from this low up. That takes us into essentially the 79 big figure, which is what I was aiming for in the first quarter of the year. So on a little bit shorter term basis, it could leave where we're at right now and never come back any deeper. That's one scenario you could just start reaching for from where we're at. Or if we go into an hourly chart, see if we can see anything in there. And left the gap open. We've had 1, 2, 3, 4 market structure, higher swing low, intermediate term low, swing low. So market structure implying that we could be maybe running for this high here. That could happen today. So we could look for the run on 75, 65, 75, 70 as like an intraday objective on this pair here. And I think that's about it. Check one more time on the dollar. Yeah. So we don't have anything that we can actually do today, but we have some levels we outlined. And again, I'll have them on our chart index for today's recap. I won't have it for the Aussie or CAD, but I will have it for the euro and cable and dollar and euro pound. I got a few questions by email that I was reading on the way back from Ocean City. and it said basically, are we going to touch more on commodities? And yes, in August, you got, like I said, you're going to get top-down templates that take you through all of the major asset classes, all four: the bond trading, the stock trading, the forex, and the, what did I miss here? Index trading, bond, commodities, and stock. So you'll have all that stuff, and forex. So you have a whole list of what it is you got to do, step by step by step, what you do on a day-by-day basis, what you do and what you wait for. It's a flow chart type thing. So it leads you through the entire spectrum of all four major asset classes, but it also takes you through the spectrum of how I trade. So if there's really no opportunity in forex and maybe there's something in the commodity market, how would you go about doing that? That's what August is all about. So August is jam-packed with what to do, when to do, and why not to do it. So everything that we've been leading you through for months, all the content, it's really given you as a trading plan. I'm actually giving you my personal trading plan. So there shouldn't be a plethora of questions really after August, but I'm making myself available all the way up to the 1st of December. So that way you guys have, you may not have a question right away when you start going through it, and then something may pop up. It may happen 6-8 weeks later, and that's why we have the additional time. But August is entirely all of my personal trading plans, from the whole macro perspective, what I look at, how do I look at it, why do I look at it, when does it make sense to be trading, when does it not to be making sense to be trading, what asset class should be focused on right now, and when you're not supposed to be trading one, what makes those conditions appropriate for that thinking process. So again, like I said, you'll know everything that I know and how I know what to do in the marketplace and when not to do it. Doesn't mean you're going to never suffer a loss, because obviously I take losses just as well as anyone else does. But when the markets are really moving well and they're symmetrical, you're not going to find anything better. Trust me when I tell you that. You'll never find anything better than this. But when it's not speaking clearly, you got to be comfortable with sitting on your hands, and that's what separates the traders from those that trade for a little while, get lucky maybe, or just blow out their account. And that's not what you want to do. So I appreciate you guys giving me an opportunity to do what I had to do on Thursday and Friday. I am regretful. I'm burnt up, so I tried my best to stay out of the sun, but it didn't work out well. It's found me sitting poolside under the umbrella, so I dozed off, and half my face is all crispy on the left-hand side. So I'm not even equally burnt. I'm just half of it. So I'm like Two-Face. But that's it for today. Again, like I said, I wish I had something we can go on today, but we don't have anything to work on. We have no news drivers, no low resistance liquidity runs. You have things to look at, outline on your charts. I'll give you more insights about that based on today's close. And it will be live again tomorrow, 8:30 New York time. Again, as a reminder, 3 a.m. New York time. Please don't check any sooner. Don't send me emails or send me private messages on the forum to, hey, look, where's the case study for London? It won't go up until 3 a.m. New York time tonight, because it's a 4:30 news driver on cable. I want to have a little bit more price action behind me before I make any observations, okay? And until then, folks, I wish you a pleasant day. Good luck at trading, and I will see you live tomorrow at 8:30 a.m.